right, good morning. How are you? Yeah. All right, everybody, let's get going. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, good morning. My name is Wayne. I'm a currency trader just like you. I get up early in the morning to do my analysis, and then I say, hey, you know what? It's a holiday today, and we'll probably have low volume and low volatility, which is an increase of my risk because technical analysis may not behave as expected. So that is the situation that we're in today. It's some sort of holiday in the United States of America. Some of the markets are closed all day. Other markets are only open half a day. So most people are probably not even trading today, except you. So you got to be careful, man. So I propose that we keep today short. You click the thumbs button now so you don't forget. I burn through some charts and then we'll call it a day. When the day trading group meets today at FX Bootcamp at 4 p.m., we will plan out tomorrow, and tomorrow is a regular old day. Later this week, we also have what? We have RBA meeting minutes, we have Bank of Japan meeting minutes, we have the Bank of England, we have the Swiss National Bank on their monetary policies. Okay, good trading week. But today, we'll start out nice and slow. Anywho, if you look at the description below the video, there are resources developed for you because you asked for them. There's a link to my book, Strategic and Tactical Forex Trading. There's a link to a 3-hour webinar on how to triple your, or how to potentially triple your profits, without changing your technical indicators or without spending more time at your charts. And how to do those 3 secrets that I share with you, how to do them all for free. I think you should watch it. I think you'll appreciate it. There's a link to fxbootcamp.com. 88 hours of training videos for $88. There's a link to tradersway.com. You're like, Wayne, I need a broker. Really? Yeah, we all need brokers. You're like, well, if you want one that's trustworthy and ethical, has fast execution speed, narrow spreads, huge swaps, and earn my loyalty and respect, well, why don't you go to tradersway.com, open up a demo account, and see if they can earn your loyalty and respect. Tradersway.com. My hair's turning a little gray, huh? Oh, I got one there. I should pull that out. Anywho, let's get on with it. Okay, so guten Morgen. Yeah. Cool. Let's take a look here. This is where we is. This is the Dixie. We dropped to support. It held. And we're down and preparing maybe to retest support. If you're looking at the pullback as a 618, then you are projecting 1382 lower, which gets you, well, a lower low. A lower low would mean risk on. Continuation of the stock market up. And not just for today, but basically all summer. Is that what you want? Is that what you think? Well, I don't know what you want and what you think. So you'll have to do it on your own. What else is going on? Kiwi following its channel, Lufle. Okay, looks like it's resuming its downtrend maybe. Okay, we call that a mean reversion. Okay, the mean being down here. Okay. Sky Killer says, hey, I analyze, or you rewatched the Fed meeting yet to try to understand the dovishness. Okay. So why is the dollar weak is what you're asking? Why can't it be weak? Usually what you see in economics, you look at the long run and you look at the short run. Those are economic terms. In what we do in the financial markets is there's the economy, which is the long run. In the short run, you have the markets. So if you're trying to, if you think, for example, the economy has some pretty serious risks of weakening, and you think the U.S. dollar would get strong, yeah, you know what? You're probably right. But then you're like, well, why are the markets up right now? Why is the dollar weak? Well, you could struggle with it, or you can like, why do you care? To be a little more facetious about it, you're like, why don't you just wait for the markets to agree with the economics? So you could say this is rational and this is emotional, for example. Okay? So Sky Killer says, yeah, I understand it's because of the pause. Right, but they're ignoring the long run, which the Fed's going to raise interest rates again. Yep. Also, you could interpret what they're doing as simply being wrong. You can say, well, I totally disagree with this. Stock market's rallying, and yet the economy certainly has real-world risks. Okay, well, you could be right that they, meaning whoever's buying the stock market in an economy like this, you might be right that they are wrong, but you would be wrong if you were trading against them. So the way I kind of look at it, to say the same thing from a third different way, because I don't know what clicks, but you can look at it as economics as what should be, and you can look at technical analysis as what is. So you could trade technically, let's say, again, let's talk about the stock market. Let's say the S&P 500 is up and way up. Yeah, it'll continue to be up until it reverses. So you'd sort of be a fool to short the S&P 500 when it's in a crazy bullish rally. What kind of fool would sell that? And you know, your mama didn't raise no fool. So you just say, well, as long as it's trending up, I'm short-term long. So maybe you day trade your way up. But because you're day trading and intraday trading, you know the right levels to watch technically. And you know the economics behind maybe your longer term bias, which would be S&P 500 down. So you just wait and you wait and you wait. You keep buying the stock market as long as it's going up. And then using sound technical analysis, you notice that suddenly there's a lower high and a lower low scenario. So you're like, okay, I guess the bullishness is over. Reality is clicked in, or maybe seasonality is clicked in. Doesn't matter, but something has once again changed. And you say, oh, I think I understand the rationale now for a stock market down. And I agree with it, having analyzed the long run macroeconomic situation. And now you swing trade short. Remember, you were day trading long. But now you might be swing trading or position trading short and letting your winners run further because you believe there's technical and fundamental congruency. Okay? So Sky Killer's thesis is risk on till July. Yep. And then seasonality kicks in for profit taking. Yep. And then we start a downtrend. Yep, sure. Okay, head high till July. Or if you're in Saskatchewan, knee high by July. I grew up in wheat and barley and flax and rapeseed country. But now you can't say rapeseed, so you have to call it canola oil. Canola. But canola is just Canadian low acidic vegetable oil. But all right. So anywho, so there we go. That's how you do all of that. Hey, did you click the thumbs up button? All right, how about yen yen? Yen is weak as we want it to. Yeah, I think you're probably right on both accounts, Lucas. It's a beautiful corp, and it is a beautiful crop. Yeah, not many small family farms anymore, huh? Yeah. All right. So what do you think about that? That's the best one, isn't it? That's the best one, huh? That's been performing very, very well. Go smaller time frame. Just beauty, huh? Daily, 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 4 hour, daily, daily. I got to get this one on daily. But nonetheless, very, very, very bearish. Oh, is that right, Highlander? No way. Well, it makes sense. Canadians are good at several things, but especially drinking and making babies. Often both at the same time. So that's crazy. You know, when I left Canada, it was 25 million, but I guess that was I guess that was a while ago, so that makes sense. Euro doing all right, and Aussie topping a little bit, or breaking out a little bit. So let's take a look at a smaller scale, a little more in the now. Yen just performing beautifully. As you can see, we had a drop in the buck, and it's trying to stabilize, but not in a big way yet. Aussie all over the place, so sort of like CAD is doing better. Euro's doing great. Pound is doing great. If we look at the pound and we go further out, you can see it's really at an interesting level here, huh? Remember, this is the index. Yeah, I trade with an index. The pound index, pound versus everything. And it just happens to be at an interesting price relative to the past. Looking at yen. Okay. Oh my God. Oh my God. Yep. Just performing beautifully. Let's get some congruency here. This should be a 4H over there. Okay. Loveliness. This is like an ugly dog with fleas. And it hit target. Okay. Look how beautiful the monthly trade was. Just amazing. So this is typically where profit taking occurs, but remember, we've blown the doors off a lot of these plans. Okay, let's pick another one, pound. We've blown the doors off of some of these trades because somewhere in here, I don't remember which day, my guess is somewhere in here, we reconfirmed the YCC and the negative 0.1. So free and clear, plan to the up. Okay, nothing but bid. Okay. Yep, we are on the MR3 for sure. That's usually truly my Alamo. That's usually the last fallback position. Okay. Okay. Marcus says remind me of the quarterly reports you said to read. Quarterly reports. Are you talking about the ones that I do? The quarterly webinar? I forgot about that. I'm going to have to do one, right? Shoot. Where do I? Yeah. What is YCC? Yield curve control by the Bank of Japan, which is qualitative and quantitative easing in their monetary policy by maintaining a certain bond price for their 10-year Japanese government bond. Otherwise known as keeping the yen weak, baby. So you need to go to the Bank de Japan. A Bank du Canada. Oh, okay, here we go. Bank du Japan. Ba, ba, ba. Here we go. See? The bank will continue to allow 10-year Japanese government bond yields to fluctuate in the range of around plus or minus 0.5 percentage points from the target level, and will offer to purchase 10-year JGBs at 0.5% every business day through fixed rate purchase operations, unless it is highly likely that no bids will be submitted. In order to encourage the formation of a yield curve that is consistent with the above guidance, which is up here, for the market operations, the bank will continue with large-scale JGB purchases and make nimble responses for each maturity by increasing the amount of JGB purchases and conducting fixed rate purchase operations. With regard to asset purchases other than JGBs, blah, 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 blah. Okay? And then they go to explain how their economy looks and how it's going to do in the future. It's beautiful stuff. If you guys don't read this, I don't know what you do. What do you do? Right? You don't drink, don't smoke. What do you do? Okay. So anyways, they explain the world according to the Bank of Japan. But they also, not only do they buy these JGBs, they will buy an unlimited amount. They have no budget. They will buy with an unlimited amount budget-wise. They have unlimited amounts of money. What do you think of that? You're like, wait, what? Unlimited amounts of money? Must be nice to be a central bank, huh? So anywho, okay, so anywho, this has been going on a while, man. And you can go back to probably this period in here and find out that that's where their policy began. Okay, and it's been reaffirmed. So there you go. So I just pulled up a chart. So how often over the last month did this go over 5? Oh, sorry, 5. Well, 0.5%, 0.5. How many times this month did it go over 0.5? Not even once. How about over 3 months? Not even once. How about 6 months? Look at that. See, every time it hits 5-0, 5-0 said freeze, and I got numb. Can I tell them that I never really had a gun? Just the wax of the Terminator X spun. Now they got me in a cell because my records say sell. All right, so anyways, you see, as soon as we get to 5-0, it drops. So, Sky Killer, you will have to do some deeper dive research. It's all spelled out in the Bank of Japan website. Like, who cares? I can give you an answer, but it's already there. You should spend 10 hours on the Bank of Japan website in the next, how about 10 days? 1 hour a day. Yeah, that's the thing. Like, I can tell you, but that makes me the expert. And the interesting thing is people forget. So I can tell you, but there's a 99% chance you're going to forget. So what's the point? So the other way of doing it is going to the website yourself, finding the information, and there you go. But I've already given you a hint: qualitative and quantitative easing. What's the difference? Well, once again, it's already there. Yeah. So anywho, what's more interesting is, look at that. Holy smokes, huh? What an amazing, amazing time this has been. Did I do the right one? No, there we go. Okay. Also, at the beginning of the year, way back in January, this was the buying zone. Okay. And based on that, our projection was the best price, the most aggressive target was 183. And we're at 181.5. We're 150 pips away. We're 1 day away from the annual target. And you might also do a little research and find out that the peak for this pair typically is around July 1st. So July 1st last year was right in here, okay? So we know in this window, there's typically peak. Now, this is not an open and fair market of supply and demand. This is manipulated by the central bank. So, I don't know. You got to figure that out. Do what you want to do with it. But there is a logic behind it. And as they say in Australia, crikey, she's a beaut. Yeah. Yep. So remember, today is a quiet day in the markets. Don't overtrade. Don't trade today like it's just the same as any other day. It's not. It's not the same as any other day. So many markets are closed, and your volume and volatility is likely to be quite different. So we got some changes coming to QuantBox. Some neat stuff. I've been reinvesting heavily because you're my sweet baby. What do you think of like this little change, for example? Some of you have already seen this. I developed it a while ago. But how does that make you feel? This is what the dollar pairs tend to do. And where we are now relative to the norm. Aussie dollar tends to go up this time of year. Oh, look, it went up. Nice. Okay, Kiwi dollar tends to go up this time of year. Oh, look, it went up. Sweet. USD CAD, what the fudge is going on here? That's weird. Okay, oh, USD yen turning. Oh, wow, it was really high and then it's kind of coming back. That's kind of interesting. Okay. Pound dollar kind of choppy this time of year. But around this Mayish, June-ish time starts to go up. Oh, it's going up. Very nice. Euro dollar way strong. Then a big pullback. And then what? Just kind of gliding back up to, yeah, all right. It's kind of neat, right? Look at this. It was way up, but should be kind of fading around this June, July. Oh, it is. Very cool. Cool. Anyways, neat, right? There's some really cool stuff coming that will blow you away. But I'm not going to show you now. No. No. I'm not going to show you that now. I just want to say it. There's some really neat things that are coming. Very, very, very neat things coming. Sky Killer, you were talking about that currency, that pair I was showing you, like this one I think you were talking about? No, that was annual. I was showing you the year. Oh, yes, I see. Yes, that's each, yeah. So, yeah, it's hard to, I understand it's a little hard to interpret, but you got to look at, let's go back. And then the zoom here. Yeah, you got to look at it as the period between the months, right? Yeah. So May to June, you kind of, right? You kind of have to look at these, right? Yeah. So look at it as between the dots, from dot to dot. Okay? Like, you don't want to overdo seasonality. Like, when I first started teaching seasonality a couple of years ago, we had one member that, because, you know, I used to pay, I forget what it was, $100 a month just for this information. And he was using a different service that he paid money for. So it's nice to have it all in QuantBox. But he was breaking it down to weekly. And he was doing things like, weekly seasonality says up for the pound dollar, so I'm going to buy it. You're like, whoa. That's way overdoing it. Okay. Past performance does not predict future results, but it gives you a sense of the ebb and flow of cash on a sort of a normal macro basis. Like, for example, maybe money certain times a year flow from China to Australia because of the seasonal need for iron ore and coal. And like, oh, okay, so maybe those shipments happen in the third quarter, or the second quarter, or the first quarter, or the fourth quarter, right? There's that kind of stuff. And that could, on a regular basis, on a normal basis, whatever normal means, whatever creates that normal pattern, a generalized demand for the Aussie dollar. But to do it day by day, week by week, and then forming your trades only on that or primarily on that, that's overkill. You're trying to force trades on almost false data, right? Like that's not what we're trying to do. So yeah, so look at it like the pattern between the dots and the general direction of the dots, you know, the trend of the dots kind of thing. But it would be dangerous to say, so like I could do those as a bar chart, and I've seen them, like I've had them as bar charts. But what happens is people overplay it. So if I just showed you a bar that said May has pound going up, and you're like, oh, so I'm going to buy it in May. Whoa, well, it's going, you know, that I don't know. That's worse. Okay, it's sort of worse. I don't want you to think May is up, so I got to buy it. No, I'm trying to get you to look at the lines. I want you to look at it as a flow. Okay? As a flow, which is different. It's finance versus economics, really, because finance is just the study of money over time. So you want to like, oh, around this time of year, the uptrend can wane. And you just have it as a general idea in the back of your mind. But meanwhile, this pound yen is just ripper strong, right? So anyways, you don't want to overdo it. So yeah, it's the dots, the space between the dots, and the trend of the dots that you want to kind of play with, okay? Quant box, everybody. It's beautiful. So anyways, Japanese stock market, it's thinking about that 21. But it's a weak think. See, I'm looking at the distance from this top to that bottom, right? Relative to this bottom. Oops. And that's nearly 100% pullback, which then makes me need to set this up. And it's not predictive, but it is descriptive that if the Japanese stock market wanted to fall, now it hasn't wanted to fall for a very, very, very long time. So again, not predictive. I'm not predicting a reversal. The Central Bank of Japan is pushing this up. But if, Uche wants a promo code on on QuantBox? Take the trial. It's $8. Yeah. And after that, it's what, $79. It's no biggie. Okay. Anyways, what I'm trying to say here is the technical analysis would say this becomes statistically more possible. And remember, technical analysis is just statistics. Okay? That's all it is. It's pretty cool. One of the things I've suggested is you should take a class. Take a statistics class. Okay? I know you can do it. In a 5-year period, in my 40s, I took something like 65 classes at Harvard over 5 years. You could take a stats class, and the interesting thing about doing it now in your career is you're like, oh my God, this is all about trading. When you were 20 and taking a statistics class, you're like, what's the point of all this nonsense? It's all nonsense, right? You're like, when you can see your charts in the questions, then it gets much more interesting. But anyway, so statistically, that's more likely than ever before on this chart. Okay? Okay? Well, favor, you could just pay the $8, log in, take a screenshot of the seasonality, and log out. Cost you $8 for a year. Okay? A seasonality class. See, I don't have time. So anyways, so there's that. Now, see, compare it to this pullback relative to the other move. Okay? This pullback relative to that move, it's more of a 618. This is 100. Okay? This is a 50%. This is 100. Okay? See? So in case I'm losing you, you're like, what's he talking about? Okay? See? That's a 618-ish. Okay? Then you got to do this one. That's a 618. Okay? Now you do this one, and it's 100%. So that presents a higher probability of reversal. And you might say, well, does it have anything to do with being at the monthly top? Yeah, probably. You couldn't find the link to the trial? It's in the description below the video. Quantbox.co. But you should do the course. Not the, well, yeah, and by the way, the $8 gives you a free course. But hang on. I got to go to this YouTube video. Where do I get this YouTube video? Where's your video on YouTube? I thought I had a link somewhere. Does it give it? Share. Yeah, here it is, video link. Let me bring up the actual where you guys are. Let me get to where you guys are. All right. This is what you need to do. Watch this 3-hour webinar. Don't even sign up for the $8 trial. Because you'll log in, you're like, oh, it's pretty, I don't understand any of this, and you'll leave. You got to understand the power of and importance of the opportunity you have in front of you. So you need to do that course. And then do the $8 trial if you want. But you got to understand what you have in front of you. Otherwise, you're like, I don't know, $79 is a lot of money. Oh, Jesus. Whoa, dude. Relative to what it's worth, it's insane if you sign up and then cancel because you're like, you don't get it. Holy smokes. That usually what happens, that means is people that sign up and then quit, they're not taking the training course. They probably didn't watch that, so they don't understand the concept of what they have in front of them. And then they're probably not even logging in to do the analysis. And I can't help somebody like that. I think it's insane that I'm charging that little for how much it's worth. And for people that sign up, they use it for, they sign up for a month or two and then they quit. I'm flabbergasted when I see that. I'm like, holy smokes. It's a bit of a letdown because I feel like it's my fault. Like, dude, I don't understand why you would quit. It's so unbelievably important. I can't understand why you would not need to use it. Oh, it's not making me money. Well, that's the whole thought process there. You're like, it doesn't make me money. I'm trading the alerts and it ain't making me money. That's your problem right there. If that's you and you're in that situation, like that's how you think and that's your problem. And we got to fix that. And so, I don't know. I tried to do that at boot camp. But to trade without that kind of information is just insanity. Without that background of macroeconomic knowledge, it's insanity as a foreign exchange trader, in my humble opinion. All right, so anywho, there's that. So that's how I read that chart. Yep. And I guess we'll just leave it at that. I mean, look, it's a holiday. I got up at, 5 o'clock in the morning on a holiday to do my research and preparation for the day. I've spent now, an hour with you guys, just kind of going through the charts and aligning the satellites. There's some interesting things going on, like in the exotics, and but yet it's not even a sort of a real day, if you will. Notice we hit the extreme target on Mexican peso. I've been short since February, collecting now 12.5%. Beautiful, right? So I hope you appreciate that process that I just outlined, getting up at 5 o'clock in the morning on a holiday to do economic research, because I appreciate you. For those that did log in at 6:30 in the morning and do some quick economics over at QuantBox, I think that's really cool. So yeah, it's 6:30 in the morning. The QuantBox group got together live to discuss macroeconomics. That video is available on the QuantBox YouTube channel at 10 today. So if you want to watch that, it's a quickie. I appreciate you guys logging in today to do some technical analysis and burning through some charts. I didn't do too many. I don't want to overdo it today. I want you to realize that there's an additional layer of risk today. And so do your analysis. Don't get too carried away. And don't throw a whole bunch of money on the stock market today going, how come it ain't moving? But we will have a very full and robust trading week. So thank you for being a subscriber here at Forex.Today. We'll have lots to cover. In particular, In the middle of the week, there's lots of meeting minutes from central banks. And then near the end of the week, there's lots of central bank monetary policy. Okay. So thank you for giving me the strength to get out of bed and doing what needs to get done. I think we make a good team. And as on aggregate, I think we make a great community. And I thank you for that. So from the bottom of my heart, peace on earth. May the pips be with you. May your profits be above average. Be careful today, and I will see you later. Day traders, I will see you in the day trading group meeting at 4 p.m. to plan tomorrow. And by then, we should have better charts. See you soon. That just happened.